Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Sterling Chapman. Thanks for being on the show, Sterling.
Thanks for having me, Whitney.
It was great to meet you at the Best Ever Conference just a few weeks ago in Denver, and I look forward to getting to know you a little better. But a little about Sterling, in case you hadn't heard of him before. He has a finance background as well as years of experience climbing the corporate ladder in the telecom industry. In 2017, he started buying and renting out houses, then moved to duplexes and quads. He now manages 26 rental units worth over $1.5 million. Has experience with private lending, value add, cash out refinancing, equity partnerships, and more. He's also the host of the Rent Roll radio show and president of Crestworth Capital. And he's moving into multifamily syndication this year. So Sterling, give the listeners a little more about your focus right now, and let's dive in.
Awesome. And thanks for the introduction, Whitney. I have a confession. When I started my podcast and when I built my website, I actually went and stalked your website and your podcast to look for ideas. So
I'll take that as a compliment.
Absolutely, it is. And so to back up a little bit, I have a degree in finance and I have an MBA with a concentration in finance from LSU. I'm from South Louisiana. I spent the last 6 years, as you said, climbing the corporate ladder, and I've had a really successful career at it. But a couple of years ago, I just noticed a trend every year where they would do corporate reorganizations, and people who had been, working for the company for 20 years, all of a sudden didn't have a job. And in 2017, I just gotten a big promotion, and I was all excited, and found out my boss, who had been there 20 years, just all of a sudden wasn't going to have a job in a few months. And I envisioned this, me being in my, 40s and having a bunch of car notes and mortgages and kids in private school, and the faucet just turning off, and it terrified me. I was just about to buy my first house, and I was just about to, start a family, and it just scared me. And I said, I got to figure out something else. So I started reading, personal finance books and Rich Dad, Poor Dad, and then, kind of dove headfirst into real estate and bought a couple single families. Those went well. And then I was out of money. So I had to get a little creative and borrowed some money, fixed up some duplexes, did a cash out refinance to pay them off, and walked away with some more cash flow and rentals. And then I found an older gentleman who was looking to kind of retire and get out of his portfolio he had been building his whole life, but didn't really want to take the tax liability of selling the whole thing all at once. So I got him to seller finance me a number of properties at a very low down payment. I also, talked to some friends and family who had kind of started to see my success, and they started kind of investing with me, and we bought some more properties with some partnerships where they put the down payment, and I managed, found the properties, fixed them up, and managed them. So it's been fun. It's been great. And in just the last year and a half, I've like you mentioned, I've gotten 26. I just closed on my 27th earlier this week. Rental
Congratulations.
Properties. And my initial goal, my initial fear of what's going to happen if the corporate faucet ever shuts off, it's been remedied. In a year and a half of going at this, I now have enough cash flow that I can't retire yet, but I guess technically I could. But at least if something happens to my corporate job, my family will be okay. We can pay all of our bills. So that first, goal of creating a safety net I've accomplished. And of course, the more you dive, as I'm sure the more you dive in, the more you want to get involved. And now I'm really looking to expand my operation further, which has kind of brought me to my latest interest, which I believe is your primary business, which is apartment syndication. So about I guess maybe around October, I read Joe Fairless's book on apartment syndication. And I had another aha moment, like that feeling I got the first time I read Rich Dad, Poor Dad. I said, oh man, this is a direction I want to go in. So I started my podcast, and he had you listed on some document. So I went and checked out your website. I checked out your podcast. I said, man, this guy's a class act. I really like how he's got it all set up. So I stole a lot from that to mimic my kind of setup. And the podcast is really starting to take off. I've really, started to use it as a way to reach out and network with other syndicators like yourself, and go to more conferences like the one we just went to in Keystone. And I've formed a partnership that with a gentleman out of Utah, and we're aggressively trying to find our first large multifamily unit. So we've located the funds. He works at a bank underwriting commercial property, so he's got a great background in underwriting, and we've put in a couple offers so far this month.
I think it's incredible that in a year and a half, you've been able to, I think you said, and correct me if I'm wrong, secure enough real estate that if you lost your corporate position, that, you all could still eat.
Yeah.
Right.
Absolutely.
I just think that's a big accomplishment. I just, not many people have done that or, have made that happen. I just want to say congratulations to that. That's just incredible. Most people aren't going to make that happen in that short amount of time, for sure. So, what was the hardest point of getting to that point? Before we jump into why you're pursuing syndication now, what was the hardest point of building, 27 properties in a year and a half?
Probably the pushback that I got from everybody that loved me. The perception of it being more risky, and in my opinion, it was less risky. I thought of that one source of income as being incredibly risky. It could be cut off at any point in time. But just the friends and the family, the wife, they all kind of, are you sure? Is this really what you want to do? So overcoming a lot of those objections, and that kind of pushback, finding capital at first, when I had no proof of concept, no track record, getting people to want to invest with me. Because like I said, the first 2 single family houses, I saved up and I bought the down payment. And I specifically remember, after I bought the second single family house, the first one cash flowed me $500 a month. The second one cash flowed me $600 a month. But then I was completely out of money. And I remember, like, I do endurance training. I do triathlons and marathons. So I run and I bike a lot. And that's where I learned my real estate, is through listening to podcasts and audiobooks while I'm on the road training. And I'd gotten to the point after those first 2 single family houses where I stopped listening to the books and I stopped listening to the podcast, because it just made me angry, because I didn't have any money and I couldn't keep investing. And part of me at that point just wanted to stop and didn't want to keep eating the information, because I didn't feel like there was anything I could do about it. And instead of going that direction, I went in the other direction, and I started focusing on learning more about low and no money down deals and how you could use other people's money and get creative to build up your portfolio. So I remember the first creative deal I put together very well, and I was scared. I didn't tell anybody at the time. I was, full confidence to the world, but at night I was having a trouble sleeping, going, man, I hope this works out. Man, I hope that appraisal comes back okay. Man, I hope I don't lose the job before I get the loan. All those crazy things running through my head. But after it all came together very successfully, then I kind of had that proof of concept. And then all of a sudden, I didn't have a hard time getting money and partners and investors.
I think it's so interesting. You say, nights with little sleep, or you're worrying about that, and I feel like if you don't have some of those nights, you're not trying hard enough.
Right. I like the Mario Andretti quote. He said, if you have control over everything, you're not going fast enough.
That's awesome. I love that. So you had a problem though finding capital, and I wonder how that changed. Like over a year and a half, has that changed? I know. You're pushing towards syndication now, so maybe you haven't needed more capital, or the kind of capital that maybe we have to do a syndication. But you still found a way to buy more properties. And I know you said you seller financed something, and was there other times, or did you find investors?
So yeah, I've found investors. I'm now to the point where there's a lot of people that want to give me money and want to get involved. Now I'm just trying to find the deals and the time to execute the deals is my main. I have a 7-month-old son.
Congratulations.
So between my son and managing all those properties and my W-2 job and my podcast, really at this point, my biggest struggle is finding the time to source the deals and actually execute the business plans on them.
So you're still working full time. You're self-managing what, 27? Is it 27 units?
Well, I'm self-managing 26, and I'm in the middle of rehabbing a single family that I picked up last week. But we'll be done rehabbing it and have a tenant in there in a couple of weeks, and then it'll be 27.
And you have a 7-month-old at home, and you have a podcast. So yeah, I just love listing those things out like that, because like it can be done. I hear excuses all the time from people. I don't have time, and I've been working full time while doing a daily podcast, while syndicating deals, going through adoption process. I mean, it's just craziness, right? But you're either going to find a way to do it, or you're going to find a way not to,
Right.
And so, I just love hearing stories like that, because I want the listener to know that it can be done. You can push and make it happen, just like you've done. And congratulations to you on, your success in the real estate and how you're pushing forward now and building that financial freedom for your family as well. So, let's move forward now. Now you've had success. You just picked up the 27th unit. Now you're gaining some steam and some confidence, right, in this real estate business, even with other people. You mentioned now you have people that want to invest with you, and that's the way it works. Like they're skeptical at first, right? They're like, wait a minute, Sterling, like, that you're doing what? They're skeptical, right? They've never seen you in that space, but now they're, whoa, and they want a part of that. And so now, people are coming to you, which is common. They see somebody pushing and making it happen, and they want a part of that. And so now what's your plan moving forward?
So my plan moving forward is to continue doing what I'm doing. There's a lot of good opportunities here locally in Baton Rouge. There's a lot of good cash flow. So for small multifamily and small single family houses, there's still a lot there. When I became interested in apartment syndication and started analyzing markets on the factors, that that you analyze when you decide where you want to make a multi-million-dollar purchase in a large multifamily asset, you start looking at things like population growth and job job diversity. And crime rates, that it just locally doesn't seem to be the best market. I can continue to grow my small portfolio in this market because I know this market like the back of my hand. I know where the bad areas are to stay out of. I know, kind of worst case scenario stress test I can put on the things I buy.
I know people that are looking for single family homes that are just cash flowing $50 to $100 a door, much less if you're cash flowing at $500 a door. I mean, my goodness, that's a pretty good deal.
Yeah, they've got some great opportunities, and we're still actually seeing some flooded. Back in 2016 in Baton Rouge, we had a major flood that must have covered over a third of the city and some of the surrounding cities, and not all of those properties have been rehabbed yet. So they're still lingering. Those are still lingering in.
So show us tell us about your plan to the first syndication. Have you thought that through? What's your steps to getting there?
So what we've done up to this point is we've put together, the first step was, we created a website, we created a thought leadership platform, and we've started to kind of grow our brand. And I did that, personally, just because at that point I didn't really know who I was going to be working with, but I got to the point, as I mentioned with my time earlier, where it's like, okay, I need a partner with someone. I can't do everything myself, nor do I think it's responsible when you're going into something like this that you've never done before. So my initial partnership was with a gentleman out of Utah that is I met on Facebook. He was looking for a capital raiser for a group he was being a part of. And I thought, well, I could probably help raise some capital. So I reached out to him. That group, we didn't end up going with because they had a different type of model that for investor splits that I wasn't really into. So I broke off, and him and I kind of joined up together, just us two. And he introduced us to another gentleman who has executed 7 successful syndications, and has said that, he has the capital. If we can bring him a deal that meets his criteria, we can partner on it. So from there, we've been going back and forth analyzing, all right, which markets do we really want to be in? And, we've selected our top 3 markets, and we kind of have a criteria where if we get a deal that's outside that market, but that market still hits this criteria, we'll consider it, but we're going to focus our efforts on these top 3 markets. And from there, we've just been working on building broker relationships. So one of the things that I decided to do was reach out to some of the brokers in the markets that we wanted to be in, and ask them to be on my podcast, to just give me a chance to get to know them better, give them some free publicity. But like I said, we've made a couple of offers on some properties that fit our criteria, and we're just going to continue to make offers until we get one that works.
I think it's just neat to see, like, somebody that's, you've built a track record now, right? Even though it's in, say, small multis or single family, like, you've built some track record, and even in the corporate world, that still helps bolster your track record and credibility, and then, but like moving into a syndication, I think it's just neat to see, like, okay, you're building credibility through a thought leadership platform, and now you found a partner, and like, it just starts to grow. Right, your network starts to grow, and now through your podcast or through a thought leadership platform, your network and your brand starts to grow, and people start recognizing you, as an expert in this space, or somebody that's doing stuff, and so okay, so now you have a partner, you all are looking for deals, and so now you're analyzing markets, or what's happening now?
So yeah, we've actually analyzed the markets. We've like I said, we've picked our 3 that we want to focus on, and at this point, we're just trying to build broker relationships in those markets.
Okay. And were there some specific things about those markets? If you can share the markets, great. If you don't want to, understand. But and why you picked those markets?
Yeah, I don't mind. So one of the markets that we really like is Huntsville, Alabama. Another one is Jacksonville, Florida. And another one is Lexington, Kentucky. We like the job growth over the last 12 months. We like the population trend over the last 15 years. We like the job diversity. We like the decreasing crime rates. So those are the main types of things we were looking at.
Nice. Nope. Those are all important things, and those are all supposedly great markets. They're not markets that I'm in, but okay. So now, and I think also it's a great idea about reaching out to the broker to invite them on the show, and you're providing them some free publicity, and providing hopefully a little value. Right? Has anything come of that yet, or how have those relationships worked out?
Well, we've actually just started to extend those invites this week. Okay. So we haven't had any traction on that yet, but I would expect a response. So it's a few of the brokers we've reached out to have sent us deals in the past. We're just trying to, strengthen that relationship at this point.
Sterling, how are you prepared for this potential downturn that everyone's talking about?
Well, I'm under the impression that I'm going into the business that doesn't have to worry as much about the potential downturn. So, I watch everybody else watching what the stock market's done this past week and panicking and freaking out. But, a majority of I say wealth is a big number for, what I have, but, a majority of my money is in real estate, and I don't really see it, being majorly affected, not the way I invested in it anyway. I have long-term fixed debts with a pretty big gap between the debt and the cash flow. So I'm not terribly concerned. I don't really see any economic conditions changing my tenants' abilities to pay rent and my ability to pay the note. So I honestly, I have a 401k that I contribute the max that my company matches, but I haven't even checked it this week. I'm sure it went down, but I don't really care because that's not really where I'm focusing all my energies and efforts. From my understanding of economics and multifamily, if there is a crash and people have to move out of the big fancy houses into apartments, that's only going to increase the demand in the space I'm in. So, I mean, could it temporarily affect the value of the assets? Probably, but I'm not planning on selling them anytime soon. So I don't really care. I mean, I'm sure it'll come back around. So as far as how I'm preparing for it, the same way I was a year ago. I started going in this direction with the expectation that at some point in the future there is going to be an economic downturn, and this is what I want to be doing when it happens.
Nice. Yeah. Most people get in trouble when they're made to sell, when they don't have a choice, and usually they're over leveraged or they didn't have a reserve budget or things like that. And it sounds like if you're cash flowing up to $500 a month on some of your units, you can afford to take a little less rent too, if you had to. Right. But tell me a way you recently improved your business that we got ours.
You kind of got chopped up a little bit. Could you repeat the question?
Tell me a way that you've recently improved your business that we could apply to ours.
A way that I've recently improved my business. I don't know how much you could apply it to yours. I'm in the process of refinancing some shorter term debt into some longer term fixed debt, which helps me sleep better at night, knowing that regardless of how the market's going to perform down the road, I won't have to refinance. I've got fixed debt locked in for 30 years, and that makes me feel good. And aside from that, the longer amortization makes me cash flow more. So
what's a way that you're finding investors right now?
So a lot of it right now has been word of mouth. The people that are investing in my kind of my local endeavors are friends of friends who saw me, who heard the show. I mean, people really underestimate the power of these thought leadership platforms. I've had tons of people reach out to me, and since it started, I had a guy just the other day reach out to me. And he said, "Hey man, I'm in New Orleans. I heard your podcast. Would you be willing to have coffee if I drove to Baton Rouge? It's like an hour drive." I said, "Man, if you drive all the way to Baton Rouge, yeah, sure, I'll have coffee with you." Well, he was on the fence about investing. He's been on the fence, too scared to make a move for a couple of years now, but he knew it was what he wanted to do. And he told me, he said, "Man, I'm just sitting on like 150 grand in my checking account, just sitting there, and I don't know, what my next move could be." I said, "Well, I mean, if you want some guidance, we could partner on a few deals, and we could use that money. I could give you a decent return, and you could learn through the process." And he loved the idea. So that just kind of organically is how I've been finding investors for my local projects. And as far as finding investors for syndications, one thing I liked that I read I read Hunter Thompson's book on raising capital for real estate, and I just interviewed him a couple of days ago. And something I loved that he said was, rather than trying to convert these people that are just hell-bent on the stock market, there's plenty of people out there who want to invest in these alternative assets. So go find the people that already want to invest in this stuff. And just thinking about all of the people at the conferences, all the people that we met. I mean, in Keystone last week, there was 2 rooms. One of those rooms was completely filled with passive investors who want to invest in this type of asset. So one thing I walked away from that whole experience with was focus on the people that already want to invest in this, and it'll make your job a lot easier.
What's the number one thing that's contributed to your success?
Not giving up and having a sense of urgency. So a lot of the properties I picked up it was right when they came on the market, and rather than wait until tomorrow morning. I mean, a lot of times I've woken up the broker the next morning with a full price offer to make sure that I got it before anybody else saw it, running over there on the weekend while everybody else is at a football game. I mean, I contribute my professional success in the corporate world to the same sense of urgency. But with real estate, it's really not giving up, because, I lost a lot of deals along the way. I had a lot of banks turn me away along the way. The banks are actually a hot button issue with me. So on that those first duplexes I fixed up, and I wanted to do a cash out refinance right after I was done. The first 3 or 4 banks said, "Oh no, you got to be with us for a year, or you can't do this, or we won't give you 80%, we'll give you 70%." And what really roared me up on that topic is, when a bank won't do something, they'll tell you nobody will do it. And
that's not true.
And it's not true. And it just makes me think, I wonder how many other people out there gave up. How many other people went to that bank, asked for that type of loan. The bank told them nobody will do it, and they believed them, and they went home and gave up. Luckily I'm hard-headed and went to 20 more, and I got all my deals done. But that aggravates me. Either you don't know what you're talking about, or you're lying to me, and either way, I'm not happy about it.
Yeah. So why move into syndication now after your success with these smaller multis or single family?
I mean, to scale, to get diversification. Any given day, a hurricane could come wipe out my entire portfolio. I can only personally operate so many rehabs and manage so many properties, at a time here locally. Whereas with syndication, the numbers are a lot bigger. There's a lot larger potential upside. You can scale a lot quicker with, professional management and that kind of thing. And there's just diversification into different markets.
And how do you like to give back?
So the primary way that I give back, my brother is actually he's an assistant principal at a local middle school. And the East Baton Rouge Parish school system is very, it's real dicey. There's a lot of poverty in part of the city. And he found a lot of the boys that were acting up at school came from broken homes and, single parent households. And they didn't have a lot of direction and guidance. So he started this program called Strong Men Academy as a character development and leadership program, where he brought a lot of successful and good male role models in from the community to come talk to the kids. And it's just kind of evolved. And we actually go do a lot with the kids, and there's a curriculum associated with it where, just different stages of character development and leadership. And it's really starting to take off. So I'm on his board of directors for that. So I do a lot to try and help with them.
That sounds awesome. That's an incredible way to give back and locally there too. So thanks for sharing that, Sterling. Sterling, I appreciate you sharing your story and just your success while working full time, a growing family, while making this happen. Even just your drive to go to numerous banks, even after the first few or however many told you no. And I just think it's incredible. I think the listeners and myself can learn a lot, and get some. It takes that a lot of times to make it in any business, especially in the real estate business, and be successful. And you sound like you're well on your way. I look forward to having you back on the show, let's say in a few months when you all have closed that first syndication and us walking through that. But tell the listeners how they can get in touch with you, learn more about you.
So they can call me at 225-247-5562. They can email me at sterling@crestworthcapital.com. Or they could check out my podcast, The Rent Roll Radio Show.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.